What's going on, everybody? So today we're going to be taking a look at one of my favorite trading strategies and one that I've been using for over 3 years now. And this is the one that I found to be the most consistent and profitable. So I'm going to share exactly how it works with you guys today. So the strategy is known as supply and demand. I'm sure you guys have heard of it if you've been following me for a while. You guys have seen me take trades with it, any trade recaps, you've seen all of that, okay? But this is something that works on stocks, crypto, futures, whatever you guys trade, works on all of them. All right. So first, let's take a look at a supply zone. Then we'll get into a demand zone right after. But in this situation, here is a supply zone. Okay, let me mark it out first, and I'll explain how we find one. So this right here is a supply zone. Okay, a supply zone basically shows us where the sellers are on a position. Okay, or on a stock. I'm looking to see where are these sellers so I know whether one to enter a short position or two exit my position if I'm in a long. Okay, so if you guys are playing options, this is where I look to take puts, and if I'm in calls, this is where I look to exit. Okay, so it works for either case, but it's great to have these zones mapped out on your chart. All right, so in order to find the zone, I want to first look for a strong drop to either direction. In this case, we have one right here, okay, where we have a strong follow through on a drop, okay? What I do is, before that drop happens, there's always a period of consolidation for it to qualify as a supply zone, right? So a period of consolidation is just basically where price isn't moving, okay? In this range, you can see that we had no movement at all on this stock, right? It's just a $1 range, $half range where price isn't moving at all, and it's just kind of trading in this choppy area. So this is what a consolidation will look like. Okay, so I marked that down, and this is my supply zone. Okay, so just to take it a bit slower, I look for consolidation, a strong drop, and I mark down the consolidation before that drop happened. All right, now there's 4 cases for how a demand zone or a supply zone will form, and this is one of them. And if you guys don't know the 4 ones, there's also a video that I made back then about it. It should be in my YouTube, I believe 3 videos back. And it explains all 4 types of them. So take a look at that definitely if you guys are not familiar with it. But this is one of the cases out of those 4 where we have a strong move upwards, a consolidation, then a drop. Okay? This is known as the rally base drop formation. Okay? We have a rally, a base, and a drop. So this is a supply zone formation that we find very often. So now that we know how to find the zone, here's how to take trades based off the zone. Okay, so the first test of a supply zone is always the strongest. Okay, because that's when sellers were waiting first. So in this situation, here's how I would play my entry. So I'll take my entry right as we enter that zone and show a sign of weakness. Okay, stop loss goes right above the supply zone. So in this situation, my stop loss is right above this high, which is where the consolidation was. Okay, and the first target that I will place is going to be at a recent low. All right, so in this situation, it's going to be a recent low, which was the low of day. So let me mark that out so you guys are also able to see. That is where my first target is, and this is very important to know because this is something a lot of people mess up on. The first trade that I take off a supply zone is the one that I'm expecting the most range on. Okay, this is usually where I'm expecting a pretty strong drop or a pretty strong bounce depending on if I'm playing a demand zone or supply zone. Okay, so the first bounce, I'm looking at playing to a low of some sort. Okay, whether it's this low, whether it's the just a strong pivot point, I'm looking to play to that level. Now the second one I take, I'm not going to be taking it to a low, and the reason is, even though it's going to hit it most likely, I don't want to risk it because it's not as strong, right? Because the sellers that were initially there on the supply zone are not as strong anymore. They got their orders already filled and they're out of the way. So what I like to do in this situation, if I don't have a level at all, I play off a percentage based. So let's say if my trade is going 10% profit, 15% profit, and so on, I take my profits along the way and raise my stop loss. So in this situation, let's do a replay so you guys can see what it looks like. So in this situation, we're going to be taking a look at the trade where we have that drop, right? And around here on Tesla, you're going to get about 15% profit, 20% profit on average. And once we already get to that point, I'm scaling out of my position, which means I'm slowly exiting and raising my stop loss as it's happening. So in this situation, my stop loss will get raised to break even. Okay, so I'm in profit and my stop loss is raised to break even. All right, this is when I play a percentage based. If I'm playing a, for example, let's take another look. Okay, so in this situation, we got our nice profit already here. We've already scaled out maybe half of the position, maybe more. Stop loss is set to break even, so if we hit back to the initial entry price, I'll exit my position. In this situation, exactly that happens. We come up, we hit that stop loss, and now we look for a third entry off that zone. All right, we got a third hit. This is where I can look to get a better position than I initially did over there. Same thing, stop loss goes above the high, profit target is 15-20%, and I let my trade ride. Okay, so in this situation, here we are, trade hit way past 15% profit. At that point, you can put your stop loss to break even to be safe, depending on what your risk management or your trading plan is. But that's what I personally like to do. And then you can just let trade ride with runners or whatever you want as it goes on. Okay, so just a quick reminder, I only like to play the recent low on the first test. All right. So now let's take a look at a second example of a demand zone. So instead of a supply zone, let's take a look at a demand zone, the opposite. So we can see we have a strong move up right here on Tesla. Okay. Right before that strong move up happened, we have a very strong consolidation. Correct? So those two are there. We know that we have a demand zone formation. Same way we did on supply, we have a demand zone one. So here we are. I'm going to mark out my consolidation period before that happens. So I'll map out this entire range. Let me move these out of the way. And we have my supply and my demand zones. All right. So this one is called a drop base rally formation. And that works pretty similar to whatever this one was. We have a nice downtrend, a consolidation, then a push up, right? That is called a rally, a drop base rally. Okay, that's the second type of a supply and demand zone formation. Okay, in this situation, I play it pretty similarly, right? Take my position once it comes to the zone, stop loss right under. The first one, when I'm taking the trade, is going to look at the recent high, right? So recent high is over here, and I exit once as it hits. So that's the first bounce. Second bounce, I'm not going to be looking to target the high. At this point, it's probably going to be just percentage based, right? So 15-20% profit, I'm going to be looking to get out. So in this situation, let's see what happens. So at this range, we're already up probably close to 20-25%. And you can very easily take your profits here, move your stop loss to break even, and let the trade ride. It's a free runner at this point, okay? So your trade is free and goes and all the way to supply zone. Returns right back to the zone. So that's two examples on one trading day, and we're going to take a look at another one so you guys can see how it works on a different stock. So let's take a look at a supply zone formation on NQ. So if you guys are a trader who likes to trade NQ, this is going to work for you. So we have a pretty strong drop right over here. We have the drop. Now what I'm looking for before that drop happened, was there any consolidation? And there was. So what I do in this situation, I map out a nice little box around this consolidation. Okay, this entire range where we had the consolidation before the drop is my supply zone. All right, so first one comes, it hits. Okay, shows me a sign of weakness with these wicks over here, and I take my position. Like I said, first test of a supply zone, I like to target the low. Okay, so in this situation, the most recent low was right here. Let me map that out. And we get a nice hit. All right, stop loss is above the zone, and we just let the trade ride until it gets there. Now, second test, even though this is going to hit that low probably as well, it does hit it. I don't like trading with the low. I can know that it's a target, but initially I'm going to be planning to get about 10-15% profit on this trade, and whatever runners keep going and profit, that's fine with me. Okay? The second test, I do not like taking a low as a target. Okay? So both of them worked out, and we got a pretty nice move on this as well. consolidation is here, and fairly nice setup all around. Okay, so I hope it's kind of making sense now slowly for you guys to understand this more and more. Let's take a look at one last example on SPY, which I know a lot of people trade. And in this situation, you can see I already have the box marked out from that day. I have my supply zone, right? We have a strong drop. Do I look and see, do I have a consolidation of any sort before that drop happened? And yes, I do. I have a little area where we didn't have much movement. Okay. Once that drop happens, I come and mark down the consolidation period. And once we enter that trade, we can take it with the same exact parameters that we did on the last one, multiple times. All right. So fairly simple. There isn't too much complicated about this strategy, but it does take a lot of practice to really get it down. So you're not just gonna go out in one day and kind of get the strategy going and being profitable with it. So this trading strategy, over time, you'll be able to find these more low risk and high reward trades. And with practice, you can turn this into your main strategy. So we'll do more videos going over this. If you guys want to see anything in specific, make sure to leave it down in the comments below and I'll go over it in another video and I'll answer any questions you guys have at all. All right. So I hope you guys enjoyed and I'll see you guys in the next video.